I, Viktor Kokotov, CEO at Curex, a digital wallet and professional cryptocurrency, discuss and explain common traits, distinctions, and why this interaction is a win-win. Cryptocurrency has come to change things once and for all. The advent of internet has created an entirely new dimension, and the new digital population now has children of its own. The crypto environment is quite young, but it has stirred quite a commotion during its decade-long history. It is not about the tech framework alone. We are witnessing the rapid growth of qualitatively new community, with its own values, beliefs, and socioeconomic particularities. Community is the spine and support for healthy development of any industry. But in the case of crypto, the sentiment of classical financial mobiles matters a lot and defines the pace in which the domain moves forward. The high volatility of the crypto market has been discouraging classical market players from being engaged in it. Scam volumes and their level of sophistication have scared them off. Price spikes and dramatic ups and downs dissuaded investors from approaching crypto. Nevertheless, the hearts of institutional investors seem to have softened. They are becoming more and more receptive of digital assets as we see positive dynamics in investments being made. There is a lot of speculation on what the future holds for traditional finance and crypto, how much they are the same, what separates them, will they eventually collide? More importantly, to what extent is the juxtaposition rhetoric relevant? Welcoming crypto to portfolio. Despite the fact that cryptocurrency is viewed as a risky asset, numerous studies suggest that it should be included into a traditional investor's portfolio. Since the inception of Bitcoin, its economic value has only gained magnitude. The huge potential is explained by the growing user base, and cryptocurrency going mainstream is now not that far away. Alternatives and digital assets should be regarded as an alternative investment, are pretty common for balanced portfolios. In contrast to traditional assets, alternative investments are characterized by lower historical correlation. Simply put, crypto wins in terms of daily return. Thus, adding them to one's portfolio provides sound diversification. The high risks are justified. Source: Costanza, Nicholas. Cryptocurrency, the argument for its allocation within the traditional investor's portfolio. 2018. In the chart above we see an example of a diversified investor portfolio. The suggested time span encompasses a 7-year period from 2011-2018, and this provides a holistic picture. By analyzing the variables for each specific asset in a given time frame, it is clear that Bitcoin is prone to high volatility. At the same time, the return on Bitcoins looks impressive as compared to other positions. All in all, crypto investment is effective for diversification purposes, which in turn helps yield positive returns. Moreover, an investor can protect themselves by hedging their positions in cryptocurrency so that digital assets become not as risky. Divide between fiat and crypto. The first and the most obvious difference between traditional stock and crypto exchanges is that they trade different types of assets. Company shares traded on stock exchanges are the embodiment of a company's equity. When you purchase a share, you join the company as part owner. In the context of cryptocurrency, the ownership depends on each specific cryptocurrency. Asset issuance is another aspect that draws the line between the two. An entity which is publicly traded and liable to regulations and laws may undertake asset issuance for financial reasons. Cryptocurrencies, the majority of them, have a limited number of coins/tokens. Then there is maturity we should mention. The history of stock exchanges comprise 2 centuries. Trading gold as well as the first analogs of price analysis date back to time immemorial. The maturity of the stock exchange market is reflected in trade diversity and high volumes and, therefore, gives birth to another distinction: market reach. It is a tough world, access is controlled and capped. Becoming part of it is a bit of a challenge. A crypto trader can do the job 24/7. The crypto exchange landscape is young and green, taking halting steps without governmental backing. Why? You can read full post on CryptoFans. News, link available in text below.